This is a Momentum Media production.
Inside Commercial Property with Rethink Investing.
Australia's largest and most comprehensive podcast covering all things commercial investing.
Hi, good everyone. Hey, going? Phil Tarrant here, co-host of Inside Commercial Property, which I record with my friend and colleague, Scott O'Neill, Director, Rethink Investing. Scott, how you going?
Yeah, very good, mate. Good to be back again. Another month.
Exactly. I know we were pretty popular. It's quite funny. I was having a chat with my accountant yesterday with some private bank people, and my accountant made the observation that more and more people are coming to him now wanting to invest in commercial property, and he's holding us responsible for it.
Well, there you go. I thought a bit of the rate rise is pushing more people out of resi, but yeah, no, good to see the accountants on the same page. So you should get him as a client.
Well, you should do. He does enjoy investing in property, this particular accountant. But I reckon we probably get him to have a chat with us at some point, and like servicing property investors who choose to focus on commercial property as an asset class. A little bit different than resi. Tricks of the trade, what works, what doesn't work. So we'll definitely tee that up. But we're sort of in a bit of a theme at the moment, Scott. We're doing the motions, we've done a lot of the academic principle-based discussions around investing in commercial property, around the asset classes, type of asset classes. How do you do it? How do you sort of look at balance sheets and all this sort of stuff? And we're in a bit of a theme now where we're getting the stories from real investors who are investing in commercial property. Last time we got together, we had a new-to-market investor, someone who was just starting off their investment journey. By memory, he fixed hail-damaged cars. So if you haven't yet listened to that particular podcast, go and check it out. Really interesting, his particular sort of philosophy and attitude towards investing in commercial property and what he's trying to achieve. But today, Scott, another guest who's sort of been at it a little bit longer and has a different portfolio and gives some sense to property investors, particularly in commercial, come in all shapes and sizes. I've been looking for this one, mate. It's going to be good.
Yeah, look, I've been working with Paloma, which we'll introduce in a second. But yeah, she's been a great client to work with. Bought a couple properties on the other end of the journey compared to our last guest. So we want to show sort of both ends of the spectrum. So higher value assets, just those really good end game type properties, the ones we all dream to own. These types of properties will give instant incomes, large amounts, enough to retire on, and that's really, I guess, a centre part of the conversation, like what these types of assets look like. And there's a couple we can go through, and there's a couple we missed out on as well. And all the same stuff we went through with our last guest, just a different end. Yeah,
no, it sounds really cool. Well, may as well, it's a good opportunity to introduce Paloma Fund Sale. Paloma, how you going? Welcome to the show. Thanks for joining us and sharing your investing journey.
Thanks for asking me.
So I have it on good account that, number one, you're a successful property investor. Number two, you're a medical professional. And I know a lot of medical professionals who swap their time and specialisations for income, and that income they normally park in property. It's been something which medical professionals, particularly specialists, have done for many years successfully. And you've chosen the same sort of pathway for wealth creation yourself. Any particular reason why commercial property for you?
Look, it hadn't even crossed my mind, and I was sort of introduced to commercial investing, it seems by mistake actually, a few different links, and I decided, I came across, I was looking to invest again, but just in residential property because that's what I'm familiar with and have been for the last few years. And then I came across Scott's book, and he was also highly recommended to me by my broker, who's the person who gives me the money. So I thought, well, I haven't got anything to lose. I was going on holiday for a week. I managed to get his book by then, and then I really couldn't put it down. So I read it over a weekend, and it made so much sense. And I like obeying numbers like Scott does. And so it really spoke to me all the sensible approach that he had with commercial investing. I really liked the numbers, and I thought, well, that sounds a whole lot better. Switching my philosophy from negative gearing to positive gearing, and that it was a lot safer, particularly, in the current times where there's so much uncertainty, to have positively geared income is a lot more attractive from an investment than negatively geared, which essentially keeps you bound in your job earning income, which you have to do. So that's, it was an accident, actually. I didn't go looking for Scott. He was delivered to me. I took it from there. I'm really happy.
And sort of down the pathway of resi property, and me and Scott chat a fair bit about this. Most investors start down the pathway of resi, then they go, hang on a second, there must be another way or a different way, and they find commercial sometimes earlier in the piece, sometimes later in the piece. Sort of negative gearing, I would assume your accountant went, hey, you should be investing in residence property because if it's negatively geared, then we can look for tax breaks. And as a medical professional, a doctor, I imagine you sort of earned good income, so it was a nice way to try and offset some of that. But you still got to make the money to pay some away, right? It's very different with commercial property. Was that sort of the approach you took? Was that from your accountant, or your accountant sort of got you down that pathway?
You mean initially investing in residential property?
Yeah.
No, look, I started that journey probably 20 years ago when I started making income, that was reliable income from being a doctor, because that's how long I've been a doctor. So I wanted to park my money somewhere, and I read a couple of books, Robert Kiyosaki's book, Rich Dad, Poor Dad. Tony Robbins, I think, inspired me, all the 90s classics and 80s. And I thought, I read them, I thought, well, it makes sense. It was all about being smart about your money choices and how to multiply what you earn and not to waste money. So I had that philosophy and I went looking for it early on, but it had nothing to do with positive gearing. All of that was negatively gearing stuff. And it wasn't my accountant that put me onto it. No, it was probably, growing up, poor basically is what did it for me. As soon as I had stable income, I thought, well, I'm not wasting it. I have to find a way to multiply it. And so, from a knowledge base of zero, I just did some reading. Unfortunately, after those first couple of books, I didn't do any further reading because it's very easy to get comfortable in a stable income. Once you're paying off, you tend to just focus on buckling down and making the income to pay off those mortgages, knowing that the payoff's going to be at retirement. It's a long-term game. That's residential negatively geared investment sort of strategies. So I didn't look into it any further. And it was really just the uncertainty of the last 2 years that pushed me to look at something that was not dependent on me having to turn up to work, basically.
Sounds pretty. I can't remember the name of your book, Scott. That's pretty bad, isn't it? What's it called again?
Rethink Property Investment.
That's right.
I nearly forgot. Rethink Property Investing.
But you co-authored that though as well. You can't take all the...
No, the wife's a big
she
part
wrote
of it.
the important bits of it. You just coloured in the pictures, right?
Exactly, mate. So day one was there and kept us going as well.
So you mentioned, Paloma, that you read it over a weekend. I hope you weren't on holidays drinking cocktails by a pool somewhere. You're absorbing yourself in,
no.
in Scott's book.
Gave that up a while ago.
So something struck a chord with you. So as you're reading the book, were you sort of perpetually thinking, okay, how does this relate to me? What can I do about this piece of information? How can I change my narrative, shape my attitude or strategy towards it?
I was very impressed with the numbers, as I said, but, there's a few aspects about commercial property that are enticing. Making it work to start with, like the process of getting the money to purchase these properties, maintaining your financial commitment through the life of the mortgage, and then what that property will be worth and what's it like afterwards, on top of what's it like to manage and how you're going to do that. Because I basically knew nothing, although the numbers worked well and are convincing in the book for me, all the other processes, I had to be sure that I would be able to have someone to help me, given that I just knew nothing about it. I really, next to nothing. And so I knew that there was already a relationship between my broker and Scott. And looking further into Scott's business, I realised that, and speaking to him, that he offered a complete service where he, it's not just finding the property, but managing the whole process of selecting the right property, purchasing it, and then managing it after that, because it has to be managed. And so if you've got no experience in that, it's kind of daunting. Once you've got the property, how is it that you manage it and how do you find the right people to help you? But Scott's business offers that. So, it's tailor-made for people like me who are willing to jump in without knowing anything and have him hold your hand.
Well, it's not a bad philosophy to embrace, and much like, if you need medical attention, you don't go to your mechanic to do it, right? You actually go to a medical practitioner who's a specialist in what you need. Yeah. Same applies absolutely inside of commercial property. So I absolutely get that. And for time-poor professionals using a buyer's agent, particularly a specialist, also resonates in, guess what, you're probably going to get a much better outcome if you try and do it yourself on a part-time basis with those skills and capabilities. And that's something that resonates with a lot of professionals. When did you first buy commercial? What sort of time are we talking about here, Scott, is this journey with Paloma?
So I think Paloma, you signed up just before Christmas from memory, and we ended up putting a
Chrissy last year.
Yeah, so 2021. So it's all pretty recent. Plus
accelerator program.
Yep.
Yeah, and it's a reflection of the budgets Paloma was working with. Like, so the first brief is, just call it circa 5 mil type purchase, and some good deal. Well, it's easier to buy in that range than say sub $1 million because you're up against far less buyers. I got more bargaining power, like in terms of negotiation power. Like the property we ended up contracting on, they were asking $5 million, and we ended up getting it for about we got it for 4.45. The net income on it was 297, so that equates to a 6.6 net yield, and that's after all due diligence and verified numbers. So that's true net return after all costs.
So that's less mortgage, less everything.
No, the mortgage is a variable cost, but less property costs.
Okay, yeah.
So if you're looking at a return on equity, you're getting probably about 11-12% on cash only, not growth. But the asset it's south of Perth, so we've been talking to quite a lot in WA recent. But this first one was like a medical centre, and I thought it would relate well to Paloma, like a good first commercial property being in the field. So
something you get.
Yeah, recession-proof asset. Like there was 3 tenants. One was a medical centre which was on a 10-year lease. It was about 7 years into it, so 3 years left on it. Big physiotherapist, and there was a not-for-profit tenant in there too. Sort of those 2 last ones were on 5-year leases. So it was how big was it? It was on 3,200 square metres of land, and the building was 1,500. So it's a big asset, especially for the money, because like 1,500 square metres under roof, that's a fairly large, expensive property, just the building itself. So there's value in the building, there's value in the land, and value in the tenants and the types of tenants. To get a 6.6 return in medical, arguably a recession-proof industry, it's a good safe bet in commercial. I think lower risk than residential when you're talking this type of stuff.
Yeah, absolutely. And no doubt Paloma, and I know banks quite like medical professionals. The longevity and continuity of your employment is good. We need more doctors in Australia rather than less doctors in Australia. And it's something you can work in for a significant amount of time as well. And it is recession-proof. So I know banks enjoy and like lending money to medical professionals, and often you get preferential treatment as a result of it. How did you find the whole sort of financing process? You said you're using your mortgage broker, relatively straightforward and pain-free on an asset like Scott's just outlined?
Yes. I mean, the usual hiccups, there's always a few hiccups along the way. It's never 100% smooth sailing or stress-free, but relatively speaking, yes. And the final outcome was exactly what we wanted. So with good terms. So yeah, really happy with really my broker. He's fantastic, and I will not be sharing her name because I don't want everyone to use her. She's
where are you based,
enough.
Paloma? Whereabouts? Are you in New South Wales based?
No, Brisbane.
You're in Brisbane,
Yeah.
Okay. Well, I'll ask you offline who your broker is. No doubt. I know all the good brokers in Australia, so
Okay.
be quite interested to know who it is. What sort of LVR were you getting at? Sort of 70%?
No, 65.
Okay.
Yeah. So yeah, and without checking this, I believe that was the best that we could get for the current lenders. Yeah.
Yeah. So a bit of a background on lending as well. Once you're in these price points, you're normally working off 65%. 70% is normally a $3 million loan or less. Above that, if the property needs to service itself, banks will offer better terms and rates for 65% LVRs or under. So, if you're one of those guys looking at these price points, work off 35% deposits.
Yeah. Okay. Which is a bit of change, right? And something. What would you say this was worth? Four point something.
4.45.
Yeah. Okay. So there's a fair bit of money down to get you into it. But what's the net numbers on it after all costs, including sort of mortgage interest?
Yep. So, all right, the numbers. So loan 3.1 mil, deposit. Once you put it all in with stamp duty and other purchasing costs, it works out to be about 1.7 mil. And the net cash flow after mortgage, after all insurances, maintenance and everything, it's 201,000.
Okay.
So
that's the interest component of the mortgage, not the principal
interest only,
component.
correct.
Yeah.
Yep. So, and I'm not sure did you get an interest only period, Paloma?
Yeah.
Or
Yeah. 2 years.
5 years? 2 years.
Yeah.
Yeah. So 2 years, and by then you're probably working off, the rents probably could be 10% higher in 2 years' time. The way Perth CPIs of the last 4 quarters has added up to 7.6% as well. So anything CPI based, it's going through the roof in the short term, and that's really good for rent increases as well. So above average rent growth will be the theme for an asset like this, which has, increases attached to CPI.
Yeah. So, sorry, just come back to the numbers then. So, net after all costs per year is 200-something grand.
201.
It's not bad going.
No, it's instant retirement for many when you get those types of numbers. And you'd need to buy a lot of, residential properties and pay a lot of it off to get even close to that number. So there's lots of people with portfolios worth 4 million and more spread over a number of houses, but they definitely wouldn't be getting 200 grand clear.
No, they'd be lucky if it's just neutrally geared, right, on resi stuff, particularly in the sort of yields that you're getting. And what's the game plan with a property like this, Paloma? Is it to use that as free cash, or are you going to pump it into the mortgage or offset it, or what's the game plan?
Oh, really to offset all the negatives of geared properties. That's what it is. Yeah.
Yeah, which makes sense, to offset negative resi property. And a lot of people do this, right? They're chasing capital growth in resi and offsetting it with positive commercial property. It's a strategy that's stood the test of time for many, Scott.
Yeah, and it's probably increasing at the moment as rates have gone up. More people are shifting towards the need of covering that ever increasing cash flow loss on properties. So there's more of a need to improve cash flow than before. So people are selling out of stock, selling out of residential, or just not buying the next residential to then offset it in a higher cash flow asset like this, and it solves a pretty good problem. 200 grand, that offsets a lot of residential debt.
It does, or at least you can continue on P9 mortgages. We don't need to go into too many details, Paloma, but what sort of assets you got in your resi portfolio? Is it in Sydney, Melbourne, Brizzy, houses? What sort of stuff?
Spread around a couple of states, and just the houses, single dwellings, yeah.
And what was it about, this property, Scott? You mentioned that it's something that Paloma would know, being a medical professional herself, so she was familiar with it. But what was it about this particular asset? I can see a picture of it there. So it's a whole of that building, is it?
Yeah.
It's a big old chunk of property. What was it that you liked about this?
Just multi-tenant, medical. You've got an established, really good 10-year lease on the medical centre. It's south of Perth, near that Margaret River area. So there's, it's a nice stable market, ageing population, all the normal stuff you need to keep filling these types of tenancies. And they kind of fed into each other. There's upside in the rent. The building was quite new as well. It appears like the building pest was very clean. Yeah, you don't see many of these. These are generally held forever. Once someone buys them, you generally only get access to them when they're on the way out. And
and what was the purpose for this person selling this property? Do you remember?
Elderly gentleman selling.
Just wanted out, cash it.
Clearing affairs.
He had no debt on it, and he just cashing out.
Yeah, off-market sales. So no one else on the market saw it other than myself and Paloma, and that I think was a contributor to the yield being that high. Because if this went online through an auction campaign, it definitely would have gone for a sharper yield than 6.6. I'd probably say even mid-5s.
So why did he sell it off market then when he could have taken it and got more for it?
They just don't.
Just couldn't be bothered.
They don't
with
know
it.
the market, because how often does a medical centre sell in this part of the world? Probably never, you know. So we've got a good nationwide focus. We know what this would sell to an investor. So we've just got more context than the agent or the owner, and that's our advantage. And
that's purpose-built medical, right? Is it sole source? If medical centres are good commercial assets, but is there anything that makes that specifically built for being a medical centre?
Zoning, fit out, but you could gut the thing out and turn it into offices or retail if you really wanted to. But the zoning is the major part of it.
And I imagine they wouldn't want that to happen. And medical centres are pretty sticky, right? Medical practitioners it's like a mortgage broker, right? They like to service their local area and build that sort of clientele continuity. Yeah. It's good business, medical.
Exactly. And if that business wanted to move, they'd probably just sell the business and someone else would change the brand on it, and you've got another medical asset
Keep the client base there who's been going there for years and years and years.
Exactly.
Yeah. Interesting. And you're happy, Paloma, with that particular buy? Any reservations, or Anything you wish you did differently?
No, not at all. In fact, there were two office spaces that weren't leased at purchase, and we've just signed a lease agreement for one of those, which will be a substantial increase. And again, the net yield. So, there was room to move, and it didn't take long, only a couple of months. It's great.
So that's all upside then. So that wasn't factored into when you did your original numbers, did you do it based on full tenancy?
No, we did it with that upside on it. Okay. So there was a couple of spaces you could fill. Yeah, like Paloma could get another valuation done 12 months after settlement. They'll recognise that new rent, probably cap rated at a 6%. So there's genuine upside there. And there might be enough to redeploy and buy a whole nother property out of it. Yeah,
interesting. That's good buying. So there's another property in the portfolio, Scott, with Paloma for commercial. Can you tell us a little bit about that?
Yeah, this one's in a ring, Brisbane. So classic industrial. This is the stuff we have bought higher volumes for many years. There's rapid capital growth in Brisbane right now. This one was a cold storage facility. So cold storage in Australia, it's undersupplied compared to the rest of the developed world by a factor of about 2 to 3. So there's a shortage of it. So whenever a cold storage facility becomes available, there's tenants waiting for it. So this could be anyone from butchers to people packaging salads to frozen yogurts, anything you see in an aisle at Coles or Woolies. There's
it's got to be a warehouse somewhere, right?
Yeah, cold storage warehouse somewhere. Yep. They're expensive to set up. They're expensive to maintain. There's lots of electricity they use. So there's always value add plays with solar paneling, or you'll get higher than normal rent because of it as well. But yeah, this property came with a 7-year lease. So expiry on this is Feb 2029. So long lease profile, and that would have been very good for lending as well. CPI increases. So look, that rent starting at $333,000 on a 5.3 million, that it's just over a 6.2 net yield. 10 Ks from the Brisbane CBD, like those numbers stack up. And the property's 3,000 square metres under roof. So again, big asset. Bit more to it, like the building report was a little bit more, there's a bit more work in this one, and that was part of the negotiations, which, Paloma and I sat down and went through a list, and we got the vendor to address it for us before settlement, which polished it up a bit.
Was that just sort of make good of issues or improvements? It's more make goods?
Just maintenance, make goods.
Maintenance, yeah. Yeah, and what were the numbers on this one, Scott?
So 5.3 mil, so a total deposit of just under 2 million or 1.9 was needed for that. Cash flow after mortgages, 217,000 year one. So combine that to the other one, so there's a 400,000 passive income, 2 purchases, total tenants, or there's 1 tenant in this one, 3 in the other. So you're spreading that income over 4 different tenants. Totally different industries. Like industrial, you couldn't be further from medical, out WA, and you try. But this one was renting for 111 a square metre, which is super low. So there's upside in the rent as well. So if this tenant ever left, I personally wouldn't be nervous, because you'd find someone very quickly at probably a higher rate, if anything.
Yeah, and this Paloma, the first one being a medical centre, this one being cold storage, any reservations with this particular asset? It's, $1 million more than the place that you bought in Perth. What was it that you liked about this one?
Oh, everything that Scott said. The fact that, yes, a bit more risk, I suppose, with all the machinery, high value machinery, and then breakdown costs and many risks associated with that. The fact that it's in high demand offsets that, in my opinion, because it doesn't matter what those risks are, that you'll always get someone to tenant in almost in any condition, it seems like. And then, of course, the refurbishment, if required, if anything bad happened to your high-risk machinery, well, there's someone waiting to not only take the space and rent it, but rent it for a better price point. So that was probably the main selling factor for me. It's a rarity, meaning that any other risks were offset.
This sort of purchase, Scott, you must see it where you've got more specialised fit out. There's always discussion about who actually owns the fit out.
Yeah, and it's always in the lease as well. Sometimes it's just the previous landlord left it in there and the other tenants just resumed usage of it. And it's important to note that, because it can affect the outgoings, your depreciation as well. So landlords generally contribute to a portion of it. And that's your advantage, because if you own the cold storage, then if that leaves, the tenant won't take it with them. And there'll be another tenant with similar needs take over it. And they'll see it, because cold storage, it's just a big fridge, really.
Yeah.
So it's expensive to, set up these fridges, and then you need all the storage under the roof as well. And so you need nice high roofs. You need, 3-phase power. And these things use a lot of power too, as you could imagine.
And just choose it up, but that's all covered by the tenant anyway, not by the landlord, which is positive in this, and one of the great benefits of commercial property. Do you get a lot of these sort of assets very often, Scott? Do they come across your books?
No, they're pretty rare. We target cold storage because the releasability we think is quite good. A lot of people think, it's specialised, it's going to be hard to fill, but it's all supply and demand related. So if there's a lot of similar tenants looking over a very small patch of available properties, the actual supply-demand ratio is in our favour in this case for now. And I know a lot of the big firms are building a lot more of this stuff because there's a shortage of it, but that's, there's a reason. There's a shortage. So the rents are going up quite quickly as a result. Cold storage in Brisbane, average rate is about $180 to $250 a square metre, depending on the size and the quality. This renting at $111. It's, a little bit older. You can see the cold storage doesn't take the entire warehouse space as well. So there's all these factors that come into that rental rate, but it is very cheap, this rent. So that will give Paloma a lot of capital growth as that value flows through over time. Yeah.
And what's the long-term play with these assets, Paloma, just to hold them? And is this one interest only as well? Are you paying off the principal on it? Again, are you just offsetting resi stuff?
Yeah, interest only, offsetting residential commitments, long-term holding. Yeah, really don't know what we'll do in 10 years' time. Depends, what the maintenance costs start to become and what competition there is. Yeah, but generally, bought to keep. Yeah.
And as a medical practitioner, how many years you got left in you on the tools before you choose to give it up?
About 20 years.
Okay. So you still got a lot of market cycles in you in terms of property. Is that the end of your commercial investing now, or you're going to is there more to buy?
I don't think so. Oh, no, it's quite addictive. It's quite a bit of fun. It's especially enjoyable when you're seeing your bank balance every month. So I don't think that'll be the end.
That'll be the end of it.
Scott will hear a lot from me.
When you're in theatre, is property a big topic of conversation? Is normally golf games and other sort of more benign things?
Oh, it's usually child events. A lot of people have got kids and families. It's mostly about families. A little bit of politics.
Not commercial property.
Definitely not commercial property. No.
Maybe that's a new theme, right? Actually use it as a learning experience for people. It all sounds super positive. Do you think you'll keep buying around this price point? Will you sort of change the sort of the parameters of the sort of assets you think you're buying? Maybe it's a question for Scott as well.
Yes, I'd like to keep investing at that level. It just depends what, the next 7 years of hyperinflation is going to do and what the bank's going to lend. That's a depend,
Are you putting your fees up? Are you able to pass on increased inflationary costs in medical services?
You could. It's certainly possible to. It seems rather mercenary, so I'd rather make sure my tenants are paying proper rent. Yeah,
there you go. That's the right way to answer it. And a lot of people will be out there, Scott. We chat with a whole bunch of different investors. This is sort of more at probably less people are investing at this level. Is that fair?
Yeah, comment? It is the quiet zone of the market. So that's Paloma's advantage. That's why these numbers are so strong and the leases are so long and the locations are so great. So if you can play in that space, you will get a good deal in any market. But yeah, look, it's a changing market as well. We're seeing still such low stock levels at these levels. But yeah, compared to the cheap price points, there is more bargaining power as a buyer.
Yeah.
Because it's ruthless still. Like even though there's been your rate rises and that, if you're trying to buy something sub-million, you're up against a lot of others. And people aren't selling at great prices yet. So the price falls that we're seeing in residential, they're not happening yet in commercial. As long as you're seeing numbers like this, I see no reason why they would drop either, because the numbers speak for themselves. Like that's why my job's quite easy. I don't need to sell an asset. Like you present the numbers, as long as it doesn't, look ridiculous or the building's falling over, it represents good value.
And do you like working with people who happy to deal with numbers or work in numbers jobs, or they trust the data and the facts rather than more creative people, probably people like myself?
Look, working with like Paloma is very easy because, she respects the numbers and, it definitely makes my job easier because that's how I present properties, number-based. But, look, it's just about the education, If the more you know about it, the more you'll probably like it.
Yeah, no, it's really good. Well, I've really enjoyed the chat, Scott and Paloma. I know Paloma's got a run. I know she's probably got lots of things on, probably more property to buy somewhere or other, or people to see. But Paloma, thanks.
Lives to save. Come on now.
It's great. Thanks for coming in and having a yarn. I know a lot of people buying these sort of assets don't really like to let other people know they're doing it, but I think it's very important that we sort of share the how and the what, and we really appreciate you coming on and spending some time with us today.
There's plenty more for everybody else. I think the mentality that there's not enough pie for everybody, the pie model, I don't think that's accurate. And it's not helpful. We should share this information. I'm happy to.
We should absolutely share.
Have a lovely day. Thanks for asking me.
Yeah, thank you. Nice one, Paloma. Yeah, Paloma, fun sale. Scott, thanks for coming on, mate, and having a yarn. I do enjoy it. It's good. We've got more stories to tell, more investors to chat to, and we'll make sure we do it over time. If people want to come and have a chat with you, or if they want to get in contact or any questions, what's the best way to reach out, mate?
Just info@rethinkinvesting.com.au.
Sounds pretty good. Go and check it out, info@rethinkinvesting.com.au, or you can just go to the website, rethinkinvesting.com, and you go and check out, see what these guys are doing. Lots more of this Q&A episode coming up as well, so make sure you get your questions through. We'll see you again next time. Until then, bye-bye.